Hi everyone, welcome to this first video of the new year. I'm really excited to get back to business here and also excited to know that possibly toward the middle of this year, maybe in the fall, we can see the light at the end of the tunnel. Now we are inside the tunnel and the light is still far away, but we're all going to get vaccinated soon, hopefully, and the COVID virus will finally go away. So like you, we're just waiting and looking for a better year ahead of us. Now, I'm really excited about this video. It's 100% winners. I want to show you all the trades I took last week. Okay, there were some trades and with no losses at all. And on top of that, along with showing you the actual trades, the entries, the stop loss, the take profit levels, and so on. I'm also going to have a lesson within this video as well, so stay tuned. Now, last week, okay, we're talking again January 4th to the 8th, was an awesome trading week. We had 3 trade signals I sent out to all of my subscribers, okay? And remember, when I say it's free, you can subscribe for free as well. And I'll show you how to do that in just a moment. So we had 3 trade signals. They were all winners, 3 winners in a row. The total pips we attained from those 3 winners: the first trade 57 pips, 86 pips for the second trade, and 61 pips for the third trade, for approximately 204 pips in total. That's pretty darn good. Now, my free trade signals, I started this way back in October 7th of last year. So not really that far ago, that far back. We're only talking about really 3 months and a bit. Okay, in total I've taken. I'm sorry. In total I've sent to all of my subscribers 22 trades that were taken. So from the beginning, from October 7th to just about now, we had 22 trades, and of that, and this is the remarkable statistic, guys, 17 winners after the first 2 losses. Now, what that means is that I started off on October the 7th with 2 losing trades. So I wasn't too happy about that, but I quickly turned that around, and in a very positive way, we had 17 winners right after that. Of the 20 trades after the first 2 losers, and that gives us up to now an 85% winning ratio, guys. Really, that is really good. And remember, we're trading on the daily charts. Like each candle is a day's worth of trading, okay? So we're trading on the daily candles. Now, this is me. My name is Martin. I'm a very proud Canadian trader. Been trading here in Toronto, Canada area for about 7 years, maybe a little bit more than that. And I started a service called the ABC Forex Signals. And guys, if you want to receive these free signals without obligation, you have to send me your email address. So I send out the free signals every week by email. I know it's a little bit old school, but if you want to receive them, you've got to send me your email address. And here it is right here. You can send it to mskyj007@gmail.com. I'll also repeat the email address later on. Okay, now, before I get to the charts and actually show you the signals, show you the trades, show you the entry, stop loss, and the take profit levels, I have a humble disclaimer which I really want you to understand and adhere to. My free signal service is an educational program only. I'm trying to teach you how to trade and not give you any specific advice, okay? Don't blame me if you lose all your money. You probably weren't paying attention to what I'm teaching you, and you're not following my instructions. Remember, for now, you're trading on a demo account only with a maximum 1% risk of your account balance. So I don't want you to be like this fellow here, slumped over the desk and crying in his tea, and wondering what happened to all of his money. So I don't want you to be a losing trader, okay? So now, here's the trade review, guys. We're going to get right into it. And on January 5th of last week, I sent two different trade signals. Okay, now I sent them both on in the same email, and here's a copy of the email for all those new subscribers. Again, I want you to read this. Take a look. There are two trade signals, and I sent to all my subscribers. The two were buy New Zealand USD. Okay, so there's one currency pair, and you can sell the British pound New Zealand as well. So that's the second trade free signal. You can take both or just one. Since we're learning, I suggest you take both. Now, for all of you out there, and when you receive this message, for those people on this subscribers list, did you take both trades? I asked you to take it. And again, remember, we're still learning. We're trading on demo account. So there's no reason in the world why you shouldn't have taken advantage of both these trade signals. Further, I said in my email, open up two positions for each trade. Split each trade with half, okay, half of your normal lot size. And I'll explain what that means a little bit later on in the video as well. You will be opening up 4 positions in total, 2 per each currency pair. Put a stop loss on both positions per currency pair and put the first take profit on 1 position per currency pair. So really what that means, and I'm trying to explain this as simply as possible. Let's say you're taking the buy trade here, the buy New Zealand versus the USD, okay? You're going to split this trade in 2 halves, okay? And on 1 half, you're going to put a stop loss on it with a first take profit, okay? And on the second half, you're also going to put the stop loss on, but you're not going to put a take profit. Now, when I say split the trade, I'm talking about the lot size, okay? And you know, when you open a trade, you have to decide how large or small your trade is, and you're using the lot size to do that. So let's say, based on your account balance, you know that you're going to open up the buy New Zealand USD trade with a total of 4 let's say mini lots, 4 mini lots. It could be 4 micro lots. It could be whatever. But let's say, as an example, it's 4 mini lots. So when I say split the trade, you're going to split this into 2 halves. The first half will be with 2 mini lots, and the other half will be with the other 2 mini lots for a total of 4. Because based on your account balance, it's telling you that the maximum risk, let's say if you're risking 1%, you're only allowed to open up 4 mini lots in total, right? So splitting in half is 2 mini lots and 2 mini lots. Okay, hopefully you understand that. We're gonna maybe talk about that a little bit more in the video. Now, let's take a look at the very first trade on January 5th. It was the buy New Zealand USD. Okay, so this is again from the from my email. I've just taken a copy of it because I want you to see what you're going to receive in your email when I give out a trade signal. Here it is, the entry, buy at 72.46, 72.46 or better, okay? And in case price goes lower first, then enter a buy trade at a lower price. So just really quickly here, we're looking for a buy trade. So we're looking for this pair, New Zealand USD, to go up higher, right? Okay, we're looking to buy here and looking for price to go higher, and then we're going to exit somewhere there, right? But instead of entering here, some people want to wait to see if price comes down a little bit first, okay, before going back up, and you're getting in at a lower price, okay, lower price. So price first comes down, you get in at a lower price, take the buy trade, and hopefully it goes up to your take profit area. Okay, so that's what we mean by this little description here. We give you a stop loss at 0.7151, first profit target level, second profit target level. Okay, let's go to the actual chart and let's see what happened. Okay, so here we go. We are buy New Zealand USD. Okay, and again, we're going to, with my drawing tool, I'm going to show you The entry, okay, first of all, here's the signal right there. Do you see on that candle, that white candle? You see the entry 0.7246. That was in my email sent to you. So let's say the entry was right there. The first the first profit target was right there. You can see with this candle, it did reach the first profit target. That makes it a winner because we did reach the first profit target, okay? Our stop loss, you can see here, 71.51, and that was set right there. So stop loss, the entry, first profit target, second profit target. So far, price has not reached the second profit target. Now, by splitting the trade, your first half position would have reached here this first profit target level of 0.7293, right? Okay. And then as per past instructions, and I did say that in an email that followed on my free trade signal, I said, from here, once it reaches the first profit target level, move your stop loss right there, move the stop loss up to just to break even right here, or a little bit above there, a few pips above that, and that would have been great for your second half of the trade, right? Hopefully it would have run up higher, but you see with this candle right here, it actually came down and stopped us out. So we were stopped out with no further profits, but we didn't lose any money because right here was the break even. So this candle actually came back, and I was kind of surprised at this candle. It just came down quite a bit, but did stop us out for the second position. Okay, so I want to take that off, and that's what happened there, guys. And again, we still won quite a bit with our first position. Okay. In a bit, I'm going to talk to you about different places where to place these levels. It's different depending on what trading style you adhere to, but we're going to talk about the conservative traders versus the aggressive traders in just a few minutes. Okay. So here's the second trade, guys. On the same day, on January 5th, I gave you the signal, sell the British pound versus the New Zealand dollar. So apparently on that particular day, and I saw the New Zealand was rising in strength, the British pound was pretty weak. So I was pretty confident in this signal. Okay, here's the entry. You can see at this level, 1.8789 or better in case price goes higher first, then enter a sell trade. Okay, so again, what that means is we're looking to take a sell trade. Okay, right? And here's our entry. So here's the entry at this level right there. Sell at 187.89. So that would be this level. And looking for price to go down to our first profit, take profit level, which is here. Okay, so now in this little description says, or take the entry at better in case price goes higher first. So from here, let's say price went up first and then reversed and went back down, right? Okay, so by waiting for price to go higher, you're entering right here at a better price than here, and you're going to be making more money because it's still going to hit the first take profit level. Okay, so that's what we mean by that description. Hopefully you all understand. It's not that difficult, guys. Just read it carefully. Read when I send out the trade signal. It's not that difficult. Okay, so let's get on to the actual chart, and here it is. It's to sell British pound New Zealand. Okay, so this is a chart. Take a look, guys, and our entry was, let me just take a look. Okay, so 187.89, there's our entry right there. Okay, we put a stop loss here. You can see 190.11. Okay, right there. And you see right away in the next day, price went all the way down, and here's our first take profit. So it hit our first profit and was just shy of our second take profit. Now, after our, again, if we had the trade split into two, okay, and again, with our example, 2 mini lots, so 2 mini lots from here down and hitting our first take profit, we would have made a really good profit there, and that became a winning trade, of course. And so with the second, let me just go back. So once the both trades hit the first profit target, which is right here, we would now move the stop loss to break even, which is our initial entry here at 187.89, or just a few pips below that. When I say a few pips, it could be 5, 6, 7, 10 pips, okay? So in case price goes back, you still make a little bit of money on your second trade. Now, however, after this day right here, price, you see, reversed quite a bit, and it was 2 pips. It went, the high of this candle was 2 pips below the close of this candle. So you might have been stopped out. I believe you probably were. So that took the second position, or the second half of the trade, out again without a loss. Or if you would have had a stop loss just a little bit past the bottom of this candle, then you would have made a few pips on your second position. But that's what we mean by splitting the trade. You're always going to make money on the first position, okay? And second position, hopefully, see, if this candle would not have come all the way up here and price would have continued to go back down, you would have made money on your second position. And that's what we call in the trade, letting your trade run for more profits, okay? So now we're going to go to the third trade, guys. And this was, this I sent out by email on January the 7th. Okay, it was a sell Euro CAD. So I was pretty confident in this as well. Euro was weak. CAD was rising in strength. And again, the entry here at 155.71. Remember, it's a sell trade, guys, or better. So in case price goes higher first, okay, so in case price goes higher first, and then you're getting in at a better price, but our initial entry was here, okay? The entry 155.71. Okay, so that's what we mean. Again, here's the stop loss. The first, take profit, and the second, take profit. Okay, so we're gonna now look at the charts. Okay, and here we go. It's the sell Euro CAD. You can see based on the indicators, and this was the actual signal right here. I don't know if you can see it on your charts, but right there, there's an arrow, actually 2 arrows, signal. So we got in right there, guys, okay, at 155.71. It was a sell trade. In this case, you see price did not reverse, did not go higher, so you could not have gotten in at a better price. Now, I always, one thing you can do, if you're splitting the trade in half, you can always have one half of the trade, you take it right away. It's a market order once you receive my free signal. So just take the trade. Don't wait for it to reverse to see if you're going to get in at a better price. In this case, it didn't, right? And once it started going down, then open up your second half of the position right away, so you at least have both halves in play. And you can see in this case it went down and actually hit our first profit target here of 155.10. okay, so that was another really good winner, at least on the first half, okay, of your trade. The second half is still in play, and because if you made a profit on your first half, right now we're waiting for price to see if it can go down further to the second take profit level of 154.54. So I believe I did send out an email saying that, well, the weekend, this candle was on the last trading day of last week. So I did say, if you feel comfortable with the profits on both your halves of the trade, both trades, then just close everything, and you would have made quite a bit of money. So that was the Euro CAD, guys, and now we're going to get into a bit of a lesson. Okay, I just want to take that off. So the exit level, what I showed you in the previous charts, they are very, very important. And why do we use them? Because it's all about protecting your money, okay? So it's not really about making money. We're first concerned about protecting your money, and that's the number one rule in trading. To know how to trade correctly, you must know how to protect your money with exit levels. Okay, so there are two exit concerns. For every trade you take, you need to know, one, where to trade, where to exit a trade when it's losing. So if a trade's losing, you know where exactly to get out of a trade. Okay, you must know where to set your automatic stop loss levels and limit your loss before it becomes a much bigger loss. So how many of you have taken a trade, you're in a losing trade, you didn't really have a stop, or you weren't aware of it, and it just kept losing, and it kept, and you just kept losing more money, and you realize if you would have had a stop somewhere, at least you would have avoided or limited your loss from becoming bigger, right? It's happened to all of us. How about you? Has it happened to you? And don't you just kick yourself in the pants for allowing that to happen? So with my program, I'm teaching you how to trade properly, okay? And this is one aspect of the trading. This is really important. And the second part is where to exit a trade when it's in profit, right? Now, what happens as a trade is going in your favor, you're making money, but you also have to know where to set your automatic take profit levels. And why is this important? Because just when you're not looking at your computer or you've let your guard down, price all of a sudden has gone up, but then all of a sudden reverses and comes right back down, and your big profit now is only a small profit. But if you don't watch out, your small profit could turn out to be a losing trade, as it could continue to go against you. So the important lesson here, guys, is that you've got to automatically set your stop loss and your profit levels on your charts at the time you take the trade. So whenever you take the trade, do this as soon as possible. Set your stop loss and at least your first profit target level. Okay, so that's really, really important. Now, the next thing, different trading styles, different exits. Did you know that conservative traders think and trade differently than aggressive traders? And I'm going to tell you something right now. All of you can classify yourselves as being aggressive traders or conservative traders, okay? So it's really important to understand what type of trading style do you adhere to. And for the conservative traders right here, okay, conservative traders tend to set their stop loss levels further away, okay? And I know this sounds kind of weird. I'm going to explain that in just a second. Stop loss levels further away from their entries and set their profit targets closer to their entries. So they want to make sure that their stops are not easily hit and that price has a better chance for hitting their profit targets, right? Okay. Now, aggressive traders, they kind of do the opposite thing. They will set their stop loss levels closer to their entries. Often they'll do it below a recent swing low, or they're using Fibonacci or price levels, pivot points, or whatever. I mean, everyone does their own thing, and I'm just letting you know that often stop loss levels are placed too close to the entry, okay? And then they set their profit targets further away from their entries because they've been told to reach, once price is in profit or whatever, to try to reach a 1 to 2 risk to reward ratio, 1 to 3, 1 to 4. I mean, come on. You've seen all the videos out there on the internet, how the gurus are telling you to, don't, let your trade run. Let your trade run. Don't close your trade. Don't panic. You're looking for 1 to 2, 1 to 3, 1 to 4 risk to reward. Well, for the most part, that's baloney, because often price doesn't reach those aggressive points. So, I'll have the lesson that I've got in this video will kind of address all of this anyways. Okay. So here the aggressive traders, they want to quickly limit their losses, which is good in a way, but often the stop loss is too close to their entry, while striving to let their winners run for more profits. And that's good too, Okay, so I mean, with this I agree, but you have to know how to read the charts, and you do what the chart's telling you. So remember, you cannot outsmart price. If price is going against you, you kind of have to really watch that carefully, and at some point you have to realize that you have to get out of the trade for your own good. Okay, so continuing along, what do we got here? Okay, exit levels in real application, and this is the crux of the big problem in trading, guys. In real applications, levels only work if traders are experienced and they set their exit levels correctly. And this is the part that fails most traders. Most traders don't know how to do this, and most traders are not experienced. And that's why 90% of traders out there are losing their money. So I've got some really good ideas for you for both conservative and aggressive style traders. The best way is to use a hybrid method combining conservative and aggressive style trading strategies. Okay. Next, use the ATR indicator to set your levels. Okay. This is what I do, and I think this is the best way to really understand where your level should go. Set a catastrophic loss level whenever you open a trade at the 150% ATR from your entry. Okay, so that's 150% level, 1.5 of the ATR from your entry. Okay, now this catastrophic loss is if in the event that there's a major event that rocks the price against you by a huge margin. So it may not hit the 150%. That's good, and then all of a sudden price reverses and you're back in the game again. So it's only in the event that that something really crazy happens, or an economic news or event, political event, or something that just it makes the price go crazily in the wrong direction, and hopefully it won't hit your stop loss. But if it does, that at least it's good to get out. But I'm telling you, it's only with my trading program, it's only hit my catastrophic loss level only a few times. Very rarely will it do that. Okay, and then the interesting thing is, once you're in profit, you move your stop loss level right away to your entry, which is called the break even, or a few pips better, as soon as possible once you're in profit. Okay. Okay, this is the valuable part of the video. I want you to pay attention, make notes, and so on and so forth. And this is what I do and what I'm using when I'm giving you my free trade signal. So first of all, for the conservative traders, and you know who you are, if you're conservative and you have a little bit of anxiety in trading, but you shouldn't be. Remember, I'm teaching you. All you have to do is follow my instructions. Okay, so first of all, for conservative traders, set your first profit target level to 80% of the ATR from your entry. Okay, so if your ATR is, let's say, 100 pips from your entry, then set it at the 80% level, which is 80 pips. Okay, and there's a good reason for this. Price has a much better chance of reaching this closer level than if you wait for price to run for big unattainable profits. For those traders who are looking for the 1.2, 1.3, 1.4 greater risk to reward ratios. Okay, so this is really super important. This, guys, has helped me make quite a bit of money, and you should all be doing this. Now, next, split your trade in half. Remember, you have one trade, let's say, as an example, 4 mini lots. So split your trade in half. Okay, also split your overall lot size in half. That means the first half of your trade, you're going to trade with only 2 mini lots, and the other half, 2 mini lots. Okay, as well. The first half is set with the first auto profit level. You're setting this on your trading platform. Auto profit level at the 80% ATR from your entry, which you will automatically exit once price reaches this level. Note, you don't set a first profit target level on your second half of the trade. Allow the second half to run for more profits, and once in profit, set an auto profit level on the second half of this trade at the 150% level, ATR level from your original entry. So there it is, guys, 150%. And if price continues to go further in your direction, most likely you'll hit this before, because this is closer to your entry as well. So there you go. If you're an extreme conservative trader, I've got news for you. You can do this, guys, and I've done this occasionally as well. Not that I'm conservative, but it's a great trick. It's a great tip to make money pretty fast, or faster than normal, if you're trading on the daily charts, okay? So in this case, if you're conservative, don't split the trade at all. Then exit the entire trade at the 80% ATR take profit level. Okay, so what that means is, instead of splitting the trade in half like I always counsel, I'm always advising you to do this, right? Just keep one trade, set your stop loss, set your first profit target at the 80% ATR level, and you'll automatically exit once it reaches that. So pretty easy. You get in a trade, get out of the entire trade, nothing else to worry about, and you've made some pretty good money, okay? You don't have to worry about the second half. However, you may be missing out on huge profits if the trade continues to run for more gains. I just want you to be aware of that. So while you're closing your trade earlier and you're not splitting your trade, you still may miss out on some big profits if the trade continues in your direction. Now, for you aggressive traders, and we're almost finished the video, guys. We're almost finished, so hang in there. For aggressive traders, set your first profit target level at the 80% to 100% level. So I'm still suggesting you do this, guys. I think you're going to thank me. Remember, we're trading on the daily charts, okay? We're not getting in and out quick. We're not scalping. We're not day trading or anything like that. We usually let the trade run to at least the next day or longer. But set your first profit target level at 80% to 100%. For the same reason, your price is likely to reach the 80% to 100% mark much faster than if you're waiting for higher profit levels, okay? Next, split your trade in two halves, just like as if you're the conservative. Also, split your overall lot size in half, okay? The first half is set with the first auto profit level at 80 to 100% ATR from your entry, which you will auto exit once price reaches this level. Again, you don't set a first profit target level for the second half, okay? Allow the second half to run for more profits. Once in profit, set an auto profit level of 150 to 200% ATR from your original entry. So again, these levels are a little bit further than the conservative traders. Hopefully you can understand that. If not, send me a comment or send me an email, and I may have a separate video on this, or I may explain this to you a little bit better, okay? So we are now coming to the end, guys. If you want my free signals, there's only one way to get them. You've got to send me your email address. Then I'll put you on my VIP list. And you want to send your message that you want free signals. And also in your email, tell me where you're from. Just curious. I'd like to know what part of the world you're from, and maybe just a little bit about yourself and your trading experience, okay? And give me your first name. I hate it when people send me emails. I don't even know what your first name is sometimes, okay? But you'll send it to my email address. You can see right here. It's mskyj007 at gmail.com. Right there, okay? mskyj007 at gmail.com. Now, finally, this is it, guys. Bye for now. Cheers. Don't forget to hit the subscribe button below. Hit the like, and you can send me a comment. And when you do hit the subscribe, you've got to hit the bell icon, this little bell thing. That's the only way you're going to get future YouTube videos right into your inbox. Okay, so that's it for now, guys. hopefully stay safe, and let's all look forward to when things are going to improve in our society and we can all get out and meet each other. And so take care, guys. Happy trading. We'll talk to you again soon. Bye for now.